So today we have a very special guest. His name is Yan Wu, the co-founder at Bond and also former SoFi. Yan, welcome to the show.
Appreciate it, Mike. Thank you so much for having me.
Pleasure. And let us know a little bit more about yourself and namely some of the great news that you have achieved with Bond so far.
Absolutely. So my entire career, Mike, has been in this intersection of finance and technology. I spent well over a decade in the hedge fund industry, leading teams that were doing machine learning, AI, prediction models for making stock price decisions. And then a few years ago, I saw financial technology as an area that was just growing tremendously, and had the opportunity to join a company called Social Finance, or SoFi. SoFi is one of the largest financial technology companies based here in the United States, raised about $2 billion of capital from investors like SoftBank, Silver Lake, some of the largest investors in the world. At SoFi, I learned the tricks in the trade of consumer finance. I led the data science team there, which was about 70 to 80 people. We were doing, again, a lot of machine learning, deep learning, AI on customer segmentation, marketing problems, underwriting problems, managing risk, so on and so forth. That led me to the next initiative that I'm working on right now, which is Bond Financial Technologies. What I realized was even though $150 billion of venture money was put into Fintech last year, nobody was really working on a technology solution that helped the old world merge with the new world. And what I mean by that is banks in the United States have to issue financial products for these tech companies like SoFi. This integration between the two of them is essentially a forgotten land that people use Excel, email, PowerPoint, PDFs to basically run the day-to-day business, and it's just not scalable. For the entire industry to innovate at a much faster, much more rapid pace, there needs to be a platform-based phenomenon similar to an AWS, similar to what Twilio did to text messaging, similar to what Square has done to payments, in order to make innovation happen at a much faster pace. So at Bond, we formed a phenomenal founding team. We got great partners on very early on. And then that was much of the reason why we were able to raise a very significant institutional seed round from some of the top investors here in the Valley. So super excited. It's a brand new baby. We're coming out of stealth mode about 2 months ago, and everything's going really, really well.
Congrats again for that. It's really amazing and an impressive milestone that definitely will help you to get to the next one. Let's start to talk about some of the scale-up habits that I respect a lot in order to kind of go through this journey to get to the 100 million revenues as fast as possible. And I believe that one of the critical ingredients to scale, it's always the team. In the early stages of business, it's all about the founding team. Later on is what I like to call the leadership team version 1.0, then the 2.0, 3.0, and you never stop building your leadership team until you get to 100 million. You go for IPO or you keep building to 1B as Zoom and Box that we had yesterday in the podcast, the Chief Product Officer and Chief Strategy Officer, Jitu Patel, and sharing amazing things about how to go from 100 million to 1B, which is another kind of beast. So how important is team for you, especially that now you can compare again the times at SoFi with the times at Bond, that now it's again all about the founding team, I believe.
Yeah, absolutely. So I think team and culture are some of the most important things in building a company. So particularly early on, right, you don't really have a lot to show for it, right? Sure, I have like a what some people might call a successful resume. The other founders that are on the team have equally impressive backgrounds, right? But people are looking at this and saying, well, how is this going to be different than like the stable, nice, awesome office job that I have with like Google or Facebook or like any of these companies, right? And so when you don't have anything, right, and you're trying to build something, you have to have a strong team that focuses on trust, that focuses on ability to help each other out, and stepping in when there are things that other people are struggling with, right? And so we spent a lot of time as part of forming this company on what team means to us and what culture means to us, right? And so effectively, you can see it on our website, right? Even as a seed-founded company, if you go to bond.tech, you will see all the foundational values that we have as a team, right?
Wow.
And I think two of the main things that it manifests itself. So culture is talked a lot. People write all these articles about it, but how does it really manifest it in an organization, right? So the first thing is has to do with decision making, right? So we're going to make a lot of decisions at this company that we've never made before, right? Particularly as first-time founders who have never worked with each other in a space that's relatively emerging, right? There's a lot of things that we're going to make decisions on that we haven't made decisions on before, right? And whenever there's gray areas or disagreements, right, or we can't get through an impasse, we go back to our values, right? We go back to our values about being scrappy. We go back to our values of being customer first. We go back to our values, excuse me, about being super buttoned up on compliance, right? And that's how we get through a lot of the difficult problems that we have when it comes to decision making. Right. The second thing is about moving fast and iterating, right? So yes, like there is a propensity to move fast in the Valley, right? Now, moving fast and innovating is a function of things not working. Let's be honest, right? Like if you listen to a lot of podcasts like on this show, or if you listen to podcasts of players that are in the industry, like almost unanimously they would say things just don't work a lot when you start a company. Right. And what we have to get rid of, right? What we have to get rid of is this fear or anxiety about something that doesn't work. Because ultimately, it's not whether or not it works. It's what you learn from the thing after you've tried it and it doesn't work. Right. And so in order for us to move as fast as we can, right, in order for us to outpace the competition, right, we have to be in a position to move as seamlessly as possible. That means trying a bunch of stuff that doesn't work and trusting each other that these failures turn into things that we've learned and not into anxiety, right? Those are the two ways that I see it manifesting within the organization.
This is a very good one, and as I was talking today with one of the founders that I have the privilege to follow. So our job is to kind of beat your younger self every single day. So it's not about what happens, it's about the way we do about what happens. And it's very easy, as you said, to get caught in the middle of the storm and think that we are the ones who are in the wrong place at the wrong time. And sometimes we are doing amazing work, and we are not even recognizing ourselves how amazing we are doing. And this comes to getting to clarity, because only with clarity we can really speed up execution. So the vision needs to be crystal clear to everyone in the room, so we can be inspired and we can keep moving forward as tough times come. So and this vision has different paths to get there. And let's talk about verticals, about segments, about geos. How do you define at Bond what is the next big milestone that you need to achieve in the next 90 days, and how it fits the big area audacious goal or the vision of the company?
Absolutely. So there's a culture of the jobs to be done framework that I really like, right? And so when I think about milestones, right, I don't think about it in terms of particularly on the product development side, features, right, or code that shipped, or this feature or that button. Like, I don't care, right? What I care about is that person that is using our product. What is going to change the way that they run their business on a day-to-day basis, right? So one of the biggest challenges that we have within the fintech industry is tons of friction between financial technology companies and how they integrate with the banks, right? So what I want to know is if they were able to use our product, right, is their life going to be 10 times better? Is their life going to be like, is their innovation going to be 10 times quicker? Are their margins going to be 10 times better, right? That's what I think about when it comes to milestones, right? And then how does that, so then the question is like, how does that get manifested on a day-to-day basis, right? The day-to-day basis, I challenge every single person at this company to think about things in terms of benefits, okay? So particularly with, product, data, engineering teams, it's very much like feature focused, right? We shipped that feature. We shipped this line of code. We stood up a microservice, right? We instrumented these events. Who cares, right? I challenge everybody in this organization to focus on like what is the job to be done for the end user, right? Which is, yes, we ship this feature, right? What is the benefit, right? Is it taking friction out of my process, right? Can I turn a 1 hour task into a 1 minute task, right? Do I have a happier, much more fulfilling engagement? Or do I just cause more friction that there's just some stuff that's just not working? Or like what is the job to be done there, right? That's really important because it gets everybody engaged with the ultimate end user here, right? And that we're not just writing code into this vacuum on our computer and it's miraculously just shipping stuff out into the ether that nobody uses, right? That to me is how we manifest it on a daily basis.
Very, very, very good points. And yeah, always thinking about the customer, so customer first and how it helps the customer to be successful, and not just about accomplishing milestones for ourselves, but for our customers, because if they are successful, we will be successful.
100%.
It's always good to remind ourselves. That's why I'm saying this out loud, not only for our community, but also for myself.
Yeah, absolutely.
The community. And in terms of if we have the right people on the right seats, and that's why we start with team and culture, and very good point that you made about decision making. Sometimes if you don't have a clear value system and a clear vision or focused, which was the second habit, it will be very difficult for people to make their own decisions and to understand what to do when something happens. And this can free you up a lot of time just by formalizing in a crystal clear way what are we trying to achieve together, or even better than trying, that we will achieve together. And which are the rhythms. So everyone nowadays in the Valley and across the world are doing the dailies, the weeklies, the monthlies, the quarterlies, the annuals, the all ends, the one-on-ones, and we all know that not all, in theory, everyone, very few in reality are doing this. Let's be frank. What have been some of the most important rhythms for you so far in terms of execution and alignment for your team?
You're saying rhythms?
Yeah, correct.
Yeah. So I think it's about getting to, this is a John Wooden phrase, right? Which is next play, right? It's always about next play. Like whatever happens today, whether we win, whether we lose, whether we like have the worst day in the world or having, won a championship, he's always thinking about next play, right? So in my mind, I'm always thinking about what's the incremental next play? How can we get there faster, so on and so forth. Give you an example, right? When we first started this company, right, we didn't have product, we didn't have any code written, we didn't have like anything to show for it, right? And so the next play for us was getting validation into the marketplace, right? So what is the fastest way for us to get there, right? Most Silicon Valley companies will tell you, spend a bunch of money, go build some MVP, iterate it a whole bunch of times, right? And then like get it out to the market and see what happens, right? What we did was we went and talked to a whole bunch of customers, right? And we said, hey, if we are able to give you these set of features, would that be valuable for your business? And would you be willing to pay for it, right? And they said yes. Then we went to another customer. We said the same thing. Then they said yes. We went around and we went to 15, 20 different companies. They all said yes, right? So then what did we do, right? We built a MVP in PowerPoint on a PDF, right? With a bunch of mocks that we had someone help us put together, right? And then we went back to them and we said, okay, you said this was important, right? Here's a set of features that we believe you might want, right? Is this going to be something you would use every single day, right? And it was yes, yes, yes. Some people were saying, jumping up and down, oh my gosh, this is exactly what I need. When can you get this into the marketplace, right? So you have that validation, right? You take it to any investor, you take it to any potential employee, right? You take it to any partner and you say, here's my demonstrated evidence, right? That this is going to be important, right? So my question to you is, my challenge to anybody out there is thinking about this from like a next play. How can you get to the next play as quickly as you can? Particularly, another example I think is particularly relevant to network effects in a company like ours, which is essentially, middleware or a network relying on network effects. You have to think about the next customer in the realm of like the next 100 customers, right? That next customer, if you read The Alliance by Reed Hastings, network effects mean the next customer that you get adds more value to your current network, which means every incremental customer, right, has higher and higher marginal value. If you think about it from a Facebook perspective, every single person that joins Facebook, right, is more valuable because there's more touch points, there's more places to connect, so on and so forth, right? And so, the way that I think about it is, what is a net customer, right? Like, how can we get them on? How do we give them a better experience so that they come on board? It makes the network that we have here much more valuable for the entire ecosystem, such that the next person will want to come, right? And I think you'll see the snowball effect, particularly with network effect-based companies, that they sort of go fly under the radar a bit, and then all of a sudden there's this huge hockey stick that they hit, right? So both from an organizational perspective and then also from like how we built the business, I think of it as like a series of next steps.
Got it. And coming to one of the most, I would say, tough conversations, and that creates more anxiety coming again to the beginning of our conversation, which is the triple, 2 times, double, 3 times kind of rule. So do you think that it is realistic, or it is almost mandatory to really double and triple or double every single year when we are scaling up? What is your opinion about it?
That's a good question. So I think that you have to do it in a way that's honest and sustainable, right? If you build a good business and you have the right fundamentals in place and you understand the space, right, you can achieve those types of effects, right? We've seen it happen all the time, right? Where companies are growing 20, 30, 40% a month, right? Like doubling and tripling is almost, I would say, undershooting for some of those companies, right? That comes with understanding at the very beginning what the value propositions are, right? That comes with a very, very deep understanding of what the customer pain points are, and solving that pain point in a sustainable way such that it's a business for you to run is critically important. Let's take a look at where it hasn't really worked out, right? The obvious one I would say that's on everybody's mind right now is WeWork, right? That was a business that I think got to the point where there was way too much pressure to grow for the sake of growing, right? Without really understanding the problems at hand or how to solve it in a sustainable business model, right? And as a result, we've done things that, I think all of us agree aren't really the right ways to do financial accounting, right? Or not the ways to structure sales deals, or not the ways that you would classify a company as like a tech company, right? And I think those are things when it comes to scaling, yes, like the triples, right? The 10Xs, like all these things are important. They're only important if they're durable and sustainable.
Got it. Very good point. And again, we did have discussed people, then a little bit of strategy, then execution, and now we are one of the most critical ingredients of any company, which is cash. If we run out of cash, we run out of business. So what were your lessons raising this first round for bonds, a huge one, by the way?
Yeah, that's a really good question. So, I've been in the fundraising business my entire career, from raising funds from the hedge fund industry when I was at BlackRock to raising asset-backed securities when I was at SoFi, and here raising money for bond venture, right? So I think my take on raising money is particularly for a startup is this, right? um, you have to be in a position where you know that you're going to get to your goal, and money is simply an accelerator, right? That is the paradigm that you have to come with. So what we did was we had a lot of customer validation, right? And validation at this point with no product was someone willing to pay for a set of PowerPoint slides that had some logs, right? That's very, very strong validation, right? So yes, we could have done this a different way, right? We could have done it in advance. We could have taken a loan. We could have done it a lot differently because we were very confident that we had business. And that gives us a lot of confidence in terms of raising an institutional round where we're going to get the value out of the money without diluting the entire company away, right? And so when you go to the VCs, and you have demonstrated value on what you're going to build and a business that's durable, right? It becomes a much different conversation, right, than someone who's built an MVP, hasn't really shopped it to anybody, and is sort of unclear on what that money is going to go to, right? So that's my perspective on raising money, right? It's that you have to be in a position where you validate it so heavily, you know it's going to work, right? And money is simply an accelerator of that process.
Love the way you describe it, and a lot of founders also talk about starting to raise when you really believe that you are gaining momentum and that you can really see the vision and you can really see how to get there. And sometimes it's not only about the metrics. Of course, the metrics are critical, especially in later stages of funding, but also the belief of the founders that they are on the right way and that they will make it happen. And as you said, very well, money will just be the accelerator. So we are coming to the end of the show. It's incredible how quicker it is when we are having fun. And so if you would have the opportunity to meet yourself when you joined SoFi, because with Bond it would be too early to ask this question, what advice would you give to yourself?
Yeah, that's a great question. So at SoFi, I had a great time at SoFi. They were really good to me. What I went through at SoFi also was a very turbulent time period. I came in, the CEO left about a week after I got there. The executive team left. There was an interim team. Then we installed the new CEO. He hired a brand new team. We went through in the U.S. here, a interest rate cycle that we haven't seen in a very long time, had material changes to our business, right? And so what I can say to anybody, right, is that this was a very, very turbulent time of my career. What I would say to anybody is that it's all going to be okay, right? It's all going to be okay, right? So as entrepreneurs, we have to first understand that most of us, particularly us that are working in technology startups, raising money from venture capital, is that we're in a place of privilege, right? We are, like, entrepreneurship is one of the most privileged jobs in the world, right? And so a lot of us get caught up in like the Gary Vaynerchuk videos of like struggle porn and like, I was on my last dollar, and then like, there's no need for that. There's zero need for that. Banker don't like it. Your investors don't like it. Your employees don't like it. Your partners don't like it. Nobody likes it, right? So entrepreneurship is a luxury, right? And you have to understand that the good and the bad, the turbulence, the highs and the lows, at the end of the day, everybody's going to be okay, right? And when you understand that, you take all of the anxiety and stress out of it, and you're able to make decisions. You're able to make much more grounded, take much more grounded approaches to things, and ultimately, I think you'll live a happier life. And that's at the end what we all want, right? It's a much happier life.
Love the way you expressed it, and that's definitely what founders are getting more and more and more, that it's all about the relationship with ourselves. So we can only grow if we are able to become better. So I think there is an amazing quote of Jim Rohn, don't wish it was here, wish you were better. So
absolutely, that's a great one.
Don't wish for easier problems, wish for very hard problems, because only the legendary ones are able to really go for a very big problem.
Yep.
So be grateful for the amazing problems.
Absolutely, 100%.
Yeah, it was really a privilege to have you on the show. Thanks so much again for joining.
Hey, Mike, I appreciate it. Love what you're doing. Keep up the great work. I hope to see you grow to the next level as well.